All right, guys, back to work here tonight. Hope you guys had a fantastic weekend. Got a busy week ahead of us. Got a short holiday week, so it's back to work. It's Monday evening, getting ready for what could be a very, very busy Tuesday and Wednesday session next couple days. I have a lot of great trades I'm tracking for Tuesday, and you know me. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in and talk about my favorite trades for tomorrow, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. If you enjoyed the video tonight, do me a favor, hit that like button for me. Thank you so much for tuning in. Give me a shout out in the comment section below. Appreciate you guys watching tonight, supporting this YouTube channel. But enough of the intro. I'm a little bit behind schedule. Let's get ready for Tuesday. Where are the best trades setting up for what could be a pretty busy Tuesday tomorrow morning in our trade room? Everything pretty bullish right now, you'll notice here, right? S&P bullish, Nasdaq's bullish. Oil, boy, oh boy, is oil bullish. Sideways right now, but that big move up overnight over the weekend with the OPEC production cuts. So everything's bullish right now. I'll tell you, they're all bullish, but when you see tonight's video, you'll see why they all kind of have a different story to tell. Right now, we have what's called rotation off the low on the S&P. We have the same pattern right now on the S&P that triggered that whole big, massive spike higher on Friday. So a lot of potential breakout opportunities here on the S&P. Definitely some bear trap pullback, fake out breakouts. We got a lot cover on the S&P. Nasdaq is bullish too, but again, slightly different scenario here. There's a range right below us. We've been rotating back and forth. I could definitely see some possible bull traps for reversals off the high on the Nasdaq, and we'll talk about some breakouts going higher on the NQ as well. A lot to cover on the Nasdaq. And over on oil, oil is a pretty simple game plan right now. We're very, very bullish. I'll tell you, everybody has their eyes on some deep pullbacks right now on the oil. I've got 3 different ways to time a really, really good entry on that next pullback. I also want you guys to be careful as we go higher here, because we got potential some fake out breakouts. The highs, very easy to get in trouble on the oil. We'll talk about why I say that and how to make money on other traders getting in trouble here tomorrow. So S&P's ready, Nasdaq's ready, crude is ready. I'm glad to see you are ready as well. Before we jump into each individual chart, though, here tonight, let's all talk about, we're all getting the same page for tomorrow. The big news for tomorrow is that JOLTS report at 10 o'clock Eastern time, widely known as one of the best employment numbers we're going to get. That'll be the big news here for tomorrow. And remember, the next couple days, Tuesday and Wednesday are going to be very important this week, because Friday, we've got a full close, right? Friday is again, it's going to say the early close here, but Good Friday, right? Markets are closed on that Friday before Easter Sunday this week. This, of course, is the Holy Week, right, for many of us out there. So be aware, right? That really puts a lot of emphasis on the next couple days. And one very big variable, we'll talk more about this later on in the week, is I'm not sure why they're doing this week, but they're actually going to release that monthly non-farm payroll number when the markets are closed, right? I've never seen, I can't imagine why they're doing this. It seems like nothing makes sense in this world these days, but hey, we don't make the rules. We just dance to them. So they're going to release that big, one of the biggest numbers of the month when nobody can trade the stuff on Friday. That puts a heck of a lot of question mark on Thursday, right? Thursday creates this big scarcity. So we're going to talk more about this later on in the week. This could be a very unusual week, but that really, for me, puts a big spotlight on Tuesday and Wednesday. So be aware of 10 o'clock tomorrow. And don't forget, tomorrow morning in our trade room, just after 8 o'clock Eastern time, we're going to prep our charts tonight, and we'll trade the plan together tomorrow. So be aware of kind of the unusual nature of the week, the scarcity we expect over the next couple days, Tuesday, Wednesday, Thursday. Now back to our charts, because of course the money is made on the charts. I'm going to go through and talk about my favorite trades on each one of these markets. If you like making money, make sure you watch all the way to the end, because every trade I talk about tonight can be applied to your favorite market. We're going to go S&P first. first, Nasdaq second. We'll wrap things up here on the crude oil as we go into the video here tonight. Couple things first of all, guys. First of all, these are tick charts. You can see all the time frames in the upper left-hand corner. Be aware of that. This is the 21 EMA, the exponential moving average. And as always, I like to give you guys some additional time frames linked up in the description of the YouTube video. I get some 60-minute charts, some 4-hour charts. I use higher time frame charts, especially the 60-minute chart, to give me a directional bias, to give me a filter in which to look at these markets here right now. If you want to see my filters, my kind of context, grab those links in the description of the video, and you can see some good companions for these charts here tonight. So now that you know where to get more information and kind of what you're looking at here tonight, what's the most important factor on this chart right now? There are probably two big important factors. One, had a very strong move to start the day here today. Anytime we see a real strong move in one direction, we expect to get a relatively deep pullback and a retest of that level. That, of course, tells us that 57 3/4 area is a big objective. It does seem to be a little bit too high to buy right now, right? I love the idea of buying low, right? But I don't want to buy up here now because we're right running into kind of where the objective, as we say. The second big clue, of course, which I think is the biggest clue on this chart, is this trading range. We talked about this on Thursday night. This is almost identical to the situation we saw on Thursday that kind of triggered or tipped us off of that big blast that we got on Friday. It's a bullish market into a trading range. Ranges love to rotate. We get that deep pullback. The bears try a couple times. Their stops get squeezed, and now we rip running higher. Now remember, when it comes to ranges, ranges love to rotate. So the amount we go below the range, right, we call this the pendulum swing, and the amount we go above the range, you have to think these buyers are going to be hunting for that 67 level, 67.5, right, 67 3/4 up there, or on that pendulum swing. So we have a lot of bullish momentum. If the buyers get what they really want tomorrow, they'll take out this high and they'll wind up taking out this big bullish objective up around 41.80, 76 to 84 as we go higher. So knowing this is what's impacting the market right now, what do the buyers want? The buyers want breakouts, right? Yeah, the buyers want breakouts. They want to ride this momentum going higher. Buyers also want to, because they don't want to buy high, right? They want to buy the dips, right? Buy off the low of that channel, buy off the low of this larger channel if necessary, buy off the low of day as well, because we did have that big move up last Friday, right? So it wouldn't surprise me at all if we ripped lower, trapped in some bears, right, and end up bouncing right back up again, because buyers are probably drooling over any chance they can to buy as low as they can right now. It's not easy to find a short trade unless, of course, we look at a fake out breakout. I definitely think a fake out breakout has potential for a short, but these are a bit tricky. So we're going to talk about the fake out breakouts and kind of how to time that short, because those aren't as easy as you would think, right? All that bullish momentum, it can be very difficult to pick that top. So I'll talk about that as well. What should happen right now is we should keep rotating and running higher. Let's talk about breakouts first and fake out breakouts. And then what I'll do is I'll come back and we'll talk about the deeper pullbacks here, right? And kind of how to buy them if we get those deeper pullbacks as well. All right, let's dive into this now. So the most important thing remember, I don't have a crystal ball. I don't know where we're going tomorrow, right? All I know is based on what I know right now, with the information we have right now, what should continue going on. So based on this information right now, if we keep going higher here, we know where the market is trying to get to. They're trying to get up around this channel, up around that pendulum swing, right? The biggest challenge we have is not momentum at this point. It's great momentum. It's just location. And so as we go higher, my plan is to look for what are called trap setups, right? Or bear traps in this situation as we go higher. So as we're going higher here, to avoid buying high to buy as low as I can before we get up around these highs up here. I'm looking for bear traps. These are trap setups, just we talk about in the free trading course, right? Same trap setup as we go higher. Now, once we start getting up around these highs up here, we start getting a bit too high to buy. Now I want to start thinking about using these what is resistance as areas of support, going out and finding larger channels, waiting for deeper pullbacks, and now using what I call a failure into pullback combination. Imagine now we get up, right? We take out some of these big highs. Objection is accomplished. Very, very bullish now. So we're not trying to sell in this situation. We're trying to buy pullbacks. We're trying to buy as low as we can. I don't want to buy high though. I'm going to go in and mark off a trend line off these highs. We'll know more, of course, once we see this tomorrow morning. Find that, right? Find that channel. And guys, just let me talk about in the free trading course. Look left, find some prior swings, right? And then get pulling back and then get under the moving average, right? Remember, when you get under the moving average, this is where bears will come in and think this is a reversal. Hopefully they will. Hopefully they sell short below the 21 EMA. Then think about where their stops are, right? Think about where all their pain is. If I can trap those bears in, I can use this, what I call a failure, and then into a pullback combination off of that low, right? So think about these three setups as we're going higher. And again, I will talk about the reversal off the high here in a moment. As we're going higher, bear traps, right? To avoid buying too high as we kind of finish off this pendulum swing. Once we're up there though, now we're not going to force trades anymore. We're not going to chase after it. Want to buy low now. Want to buy nice and low. We're going to find channels, right? Find those channels off the high, down at that low. And we're looking for what's called a failure pattern, right? Then into that pullback pattern. These are all the exact setups you guys are learning in the free trading course, which reminds me, I know that you guys have taken the free classes. I love to see screenshots of all the winning trades, of the trades you're learning in the free classes. But listen, if you're here for the first time right now, if you're one of the few folks who have been taking the free course and learned all these entry tactics, I'm going to put a link up here for you in the upper right-hand corner. Grab that link, take that free trading course, because I'll tell you, the strategy you'll learn in that free video series will teach you a simple trick to know exactly where the best winning trades will be each day. And I'll teach you my 4 favorite entry patterns to help kickstart you making money on your own out there. If you're missing the best trades right now, if you're taking too many losses, grab that link, take that free course. It is perfect for someone trying to make the jump into full-time trading or add another income stream. If you're not making the money you want, grab that free course. You're going to love it. And let me know how you do too. I love getting the feedback from you guys who are taking that free class right now. So as we go higher, right, it's traps on the way up, deep pullbacks, trapping the bears, and up to retest that high. Again, this is all because of that rotation off the low. Now, one of my favorite trades for tomorrow is a fake out breakout. Off the high. Now, how would a fake out breakout work? How would that work? Well, let's imagine now we pop up, but we don't keep grinding, right? We don't keep going. We kind of pop up and we sink right back down in. These are tough because you oftentimes can't really pick that top. I'm not going to try to pick the top. We're an overall bull market right now. Look at the 60-minute chart. We are not a bear market, so it's very dangerous to pick tops in an overall bull market. What I want is I want to see us go up, and I want to start looking for bull traps, right? Bull traps are the key. There are 2 types of bull traps you want to look for. One is called a crown reversal. What's that look like? Buyers try once, buyers try twice. Look for that bull trap above the high. Nice strong signal that we talk about in the free trading course, and shorting it back down again. We have to think at this point, the bears want to take out back into that range at this point if they do fail off the highs here. So again, a crown reversal, which is basically nothing more than a bull trap. We may also run up and V-top, right? And begin grinding. Another of my favorites here. Mark that low, the trend line. Mark that high, and then go in, mark those swings, bull trap, right? Trap. You really want to focus on when you're going against the overall momentum direction. You want to focus on trap entries because it'll allow you to sell as high as you can, especially with this trend line coming up off of that low. So do we go up? Do we stall for a little bit? Bull trap, reversal off the high? Or do we get kind of like a V-top, right, where it comes in and V-tops as it rolls over? And that does seem relatively likely. If it is, right, we then go out and find that new channel drawn off the high and just keep on looking for, again, just like I talk about in the free trading course, those traps above that high. And if we can get a trap like that off the high, you know where they want to go, right? They want to take out some of these lows here. All right, so that's if the market runs higher here. I also want to talk about, though, and we'll talk more about this in NASDAQ as well. Let's talk about, how do we trade a pullback right now? We're pretty bullish overall. So as the market goes lower, right? Again, buyers are probably going to be looking for a long off the low of this channel, although it's not exactly my favorite trade in the world because you're buying relatively high, and we'll talk about that more in a moment. I like the larger channel better. What I really like is that run down to those lows and then picking it up, right, and buying it back up. So, that would probably be the most desirable trade for the buyers here tomorrow. But let's talk about some scenarios, right? Because again, it's a lot of momentum coming off of that low. If we pull back to that channel and we start seeing these bears come in and they try once and they try, we have to anticipate they're going to try to short off this high, right? It looks like they're stalling out in the highs right now. So we have to anticipate the bears are probably going to try a few times to short it. I got to be careful because we're buying very high right now. Anytime we want to avoid buying high, what do? We buy traps, right? So this would be basically a two-try failure pattern, like you learned in the free video course, right? But it's a trap entry because of location, right? 2 tries, that way stops. Remember, guys, the momentum is great, but if you buy high, by definition, right? If you're buying relatively high, by definition, you're not going to have a lot of big money in the market right there. So you're not going to have a good catalyst on this trade. If I don't have the big money with me, I have to have some other catalyst, and those are where stops come in. Right? Momentum is fine. Location is the issue right now, right? So if you want to trade in an uncomfortable spot, like it is right here, you've got to have some stops to get run. You've got to have some fuel to kind of push that thing higher for you. And that's where a trap comes in and running some stop losses here. Same thing here, right? Remember, we got this big channel. More important, that trend line coming down, right? If we do end up pulling back, which would make a lot of sense because this is a range we saw over lunch. We oftentimes see breakouts, pullbacks, and then go from there. Not a great location for it, right? Because again, we're kind of, right in the middle of this chart here. But again, if I can get some of these bears to trap in a little bit, if I can get those bears to try a couple times and use their stops as fuel, again, great example where a 2-try failure to rope those bears in would really come in handy for a long trade going higher there. And again, it may pop up and kind of grind down. We may not even get that chance. Might be looking for shorts, right, as we go lower. Now, if we end up all the way back at that low there are 2 core patterns to look for to get long off of that low. And why would I look to get long down here? Well, go look at the 60-minute chart linked up in the description, and you'll see why, right? I have a very hard time unless I have a very good short, unless this thing really rolls over and just dumps right off this high. It's very difficult to want to sell as we go lower right now because of that big move up that we saw on Friday. If we end up all the way down at these lows, though, see what happened on this one. See how they came down, that deep pullback. See the bears tried once. The bears tried twice, and see how they just barely got a little bit under that low, right? We call these crown reversals. We talked about this off the high, right? 1, 2, crown reversal to the high. This same pattern, right here, right? So if we roll lower here, this again, now on this example, right? If we roll over here right now, what's the problem now? Momentum's the problem now. Great location, right? Perfect location to be a buyer. You're buying low, overall bull market, range magnets up above. But the challenge right now is momentum. Remember, there's always that kind of back and forth. I'm always asking you guys, right? How is momentum and how is location? right? You buy high up here, good momentum, bad location, right? Now here we're good location, bad momentum. So if I don't have momentum on my side, I have to get some other catalyst to turn this thing around. And that's where we use stops. Okay, this is the beauty of running stops. And we talk a lot about this in the free trading course. Now, bears try once, bears try twice. Ideally, what you want is you want that trap low on this. Because when you get these big reversals off the high like this, that strong move down, they're going to want to retest that low. And so you have to give the bears kind of the benefit of the doubt. So let them try a couple times. I love that trap low. And again, the whole idea here is to let those sellers just wrap that noose right around their neck and then buy in those stops. Because again, momentum is so bearish in the short term, of course, at that point. We also oftentimes see the big move down. They retest the low. Okay, they actually take out that low, and then we go in, trap the bears in now, right? And then again, stops as fuel, running back up. There's a lot more variations of this, and we'll talk more about that tomorrow morning in the trade room. But that's the basic stuff looking here for tomorrow. We'll cover more variations as we go here. But now you've got a good idea of kind of what my mind is like right now on the S&P. Just be careful. Again, be careful shorting these markets right now. I know it feels we've gone too far, but we all know that story, right? The market can keep going as far as it wants to go, right? So I'm going to be careful they're picking those tops on there. All right, over on the Nasdaq. Nasdaq is, well, it's a little more difficult. Well, not more difficult, but it's a different scenario. Okay, what's the key component now on the Nasdaq? The Nasdaq also has a directional range, but you'll notice it's a bearish directional range, right? We're kind of bearish into that range, and we're basically rotating back and forth. This is the biggest difference between the S&P and the Nasdaq. It's amazing how different these two charts are. Remember, the S&P, right? The S&P has this bullish move into a range, and we're rotating off the low, right? All of that momentum rotating higher on the S&P. This is a lot more, well, maybe not bearish, but a lot more two-sided, right? Not as bullish as the S&P is right now. We have a very strong move higher here for the bulls, but we know that could easily evaporate, right? And end up running right back down into that trading range. As we go higher, right? If we go higher, if they do end up rotating higher, we know where they want to go, right? They want to take out that big high. So unlike the S&P, where the S&P only has a little bit more space to go for a breakout, the Nasdaq has a very big challenge in front of us of major overhead resistance, range below us, and so we're going to have to, as I see here, we're going to need a very convincing breakout, right? A very convincing breakout on the NASDAQ. Right now, it looks like the better trade up here is the bull trap reversal. So as we go, selling off of that high, right? As we kind of go back down into that range below. So buyers need a very convincing breakout higher. Sellers definitely, I would assume, are looking for reversals off that, 13,305, this area up top here, right? That's a big Friday high. Now, as we go lower, you could easily see the case now for shorting this, right? You can easily see how much easier now it will be to justify that short. Now, again, we're still pretty bullish overall. This, of course, is the faster time frame. If you go into that description, you'll see the bigger picture charts. This is not a bear market right now. So I'm looking for those bull traps, right, to short off the high here again. That could be easily one of the best trades of the session for tomorrow. And we've also got this channel here, which we'll definitely keep an eye on, right? Buyers may come in, a little possible trap right below that low. But again, this is a very difficult trade to justify, right? You see why? We're at resistance levels above the range here. This is a very difficult trade to justify. Definitely not my favorite, but something we'll talk about here in a moment. So let's talk about the up and the down here. We'll cover all the bases here. That way you've got a game plan. Again, nobody can predict what's going to happen here, so that makes more sense just to be prepared for whatever the market gives us. That way you have a game plan to make money, right? If you go out and predict everything, then you're only ready for one scenario, and then what if it doesn't happen? Then you're sitting there and making things up as we go. That's why I'm not a big believer in predicting where the market is going to go. I just don't think it prepares us to make money in all scenarios. So I mentioned a convincing breakout going higher. We are going to have to take this high out and push right on through it. We have quite a bit of open space overhead here on the Nasdaq, which is good, right? But we're going to have to literally get, like, for example, either this thing has to keep on grinding higher, for a pop and grind, like draw the channel off the high, off the low, and then go looking for, bear traps underneath, right? Look for those bear traps, those failures. We talked about this before on the S&P, right? We keep kind of grinding higher. And remember, in this scenario, I'm not really interested in buying traps on the way up, right? Because again, you're kind of running right into this overhead resistance. But if we can get this thing to kind of keep grinding, a lot of momentum for the bulls, at that point, we know that pullbacks are going to be likely at that point. So we're going to go out and draw that channel off the high, off that low. And kind of the same idea we mentioned earlier, right? Going to get that deep pullback, trap in some, in this case, sellers, get them to short this thing. Remember, even though we have resistance, we're still an overall bull market. In this example, in this scenario, it's a very strong move. And so we anticipate a retest of that high, trap those bears in with a failure pattern, right? Get a pullback combo, just as we talked about earlier on the S&P. The only big difference here in this one is I'm not really keen on being a buyer on the way up, because of location and because of that range underneath. So we need to get some very convincing breakout going higher. I would also think, too, that anywhere in this area, if we pop up and these buyers start to struggle, they try a couple. Remember, it's very bullish right now, so we have to kind of let the buyers try a couple times and use their exits as the fuel. But if they can try a couple times here, I wouldn't mind one of those crown reversals here, thinking about where all their stops are, and then looking for that nice signal closing below the moving average. Let me talk about in the free trading course, right? And that dump back down again. That would be a great trade here. It may pop up, it may pull back, try to, or officially retest it, and then we may get that 1, 2, right, back down again. So just be aware of that for the reversal. As you can see, I want to use the buyers against themselves, right? Because again, we're so bullish at that point. It's very foolish to pick tops on these because it can keep on going and going and going. If we were to kind of pop up here though and just immediately V top and get crushed back down, that's kind of the easy one, right? It's not the most desirable because you're selling a lot lower than you'd like to be selling off those highs. But again, I'm not going to get in the business. I'm not going to get in the bad habit of trying to pick a top on this. Not in a bull market, right? Maybe in a bear market. But draw that channel down off that high. Remember, these are pretty easy, right? Once that momentum turns, the range now is the magnet. We know at this point, they probably have one thing on their minds. They want to take out those lows. And at that point now, it's just a matter of waiting for that first pullback, grab that bull trap, like I'm showing you here, get above the moving average, get buyers to come in, try. If those buyers foolishly try at that point, we can then look to short into their stops, failure into pullback combination. And so you kind of see how this goes, right? So I'm not a huge fan of picking the top, but if we get those buyers trying a couple times, if I can use their stops as fuel, right? Or if we V-top off it, grind down this channel here, trap, failure, pullback combo, that could really be in an overall bull market. That could be the best trade of the day tomorrow, for easily here. I mentioned earlier on the pullback now, right? So there definitely is potential, there definitely may be a potential for a little trap setup, but horrible location, right? Horrible location. The only way I could justify being a buyer right now would be to trap these bears in and kind of have that little bear trap. Not my favorite trade tomorrow, but could easily happen, right? Could easily happen. Again, very bullish overall. This one just seems to be playing with fire. The S&P seems more likely for that one, right? Because the overall bullishness into that trading range and then rotating higher on the S&P. And again, if all we get is this thing just punching lower and grinding down, again, I'm going to find that channel and be looking for that first test. Okay, we always say in our trade room, the first test is the best test. That'd be a good example of a first test off the high of that channel. And again, if we do end up rolling all the way down, unless this thing just keeps on going and going and going, I'll be looking for same thing, right? Look at that pattern right there. Say roll it lower. Remember, at that point, very bearish in the short term, but still very bullish overall long term, right? The bullish long term is the filter. So I don't want to sell down here. I let those bears try a couple times, right? Because of why? Because of all that short-term momentum, great location, and then simply running those stops for that run higher. So this pattern right here, over here, right? Bring it down, trap those bears in, run those stops back up. All right, guys. And again, I'm sure there'll be something I missed on this video tonight, but that's what we have our trade room, right? We'll fill in any blanks tomorrow. It could be a bit of a squirrely next couple of days because we've got that weird Thursday, Friday later on this week. But I'll see you guys tomorrow in the trade room, and we'll kind of sort out any changes on that. But at least now you get a good kind of understanding on what's affecting that NASDAQ. Let's wrap things up tonight with the wild one, right? The oil chart here tonight. Well, it's not that wild. You know, we're from OPEC over the weekend. OPEC basically jumped the gun. Everyone was kind of wondering who would cut first. Would the Fed cut rates first to spur the economy, right? Or would OPEC cut? Well, we know the answer to that now. OPEC clearly cut first. Not a significant cut, but definitely enough to spur this thing. If you are a member of our trade room, you know this image right here. It's a bullish directional range. Okay, we see a lot of these in our trade room, and you could easily argue they're one of the easiest types of markets to trade. And the reason I say that is because all of this momentum, right? Buyers are clearly in control. It's a very big move up. Okay, what's the problem with the big move up? Buyers are not going to want to buy high. So we have to be weary when if the market goes higher here right now. Be careful buying too high. We have to assume with that big move going higher that any deep pullback right now will likely be seen as a buying opportunity, right? So that's one very big part of this. The size of that move higher, it just makes it very difficult to justify being a seller anywhere down here. And we talked about this morning in the trade room. The hardest part is if this thing shoots lower, is not convincing yourself that, oh my goodness, this time is different. Oh, no, it's probably not. It's probably not. All right. I don't care what the news media says or what Bloomberg says. There are probably going to be a lot of buyers waiting down there. It's probably not different this time. So tell the little voice in your head to quiet down and follow the game plan. We outline this game plan quite a bit in our morning trade room. So if we do see that sharp pullback, the most difficult part about these scenarios is not to talk yourself out of that trade and go, oh, maybe this time is different. Maybe it is. Probably not. Probably not, right? There's always possibility, but probably not. So keep that on your mind for tomorrow. And the range is a magnet, right? Ranges are they're magnets, right? So if we get that pullback, right, we know the buyers want to go back up into that range. The next thing is the breakout. Right? We have to think with this strong move going higher. Remember, we talked about this earlier. Anytime we see a strong move going higher, we expect what? A pullback and a retest. So mission accomplished for the buyers will be at 81.69 right now, right? To go back up and retest those highs. I'm going to have to see, like the NASDAQ, we're going to have to see a very convincing breakout going higher. The buyers have to show us that they have an appetite for higher prices right now. We have a couple more levels overhead. These levels, by the way, this 83, 82 half level is off the 60-minute chart. If you're an oil trader, you need to be aware of your surroundings right now. That 83 to 82 half level, it's linked up in the description. Be very careful buying high. We have to get a very convincing breakout. Now, what would a convincing breakout look like going higher? It'd have to be like a pop and a grind, right? A pop and a grind would work for me. Mark off that high, mark off that low. It just needs to it needs to pop up and keep going, right? None of this pop up and then buy the first pullback. That's very dangerous because it easily could fake out breakout off the high and back in, because again, we have to assume at first that buyers are not going to want to buy high, not after such a big move coming out of the weekend. So it has to kind of pop up and keep going with again, kind of like a pop and grind, right? Finding those pop and grind channels, trapping bears in, below swings, below moving averages, right? You see a lot of these in the free trading course, right? Off of that low. Or we have to pop up, take out that high, pull back to our 21 moving average and really jump. Like they really have to show us. I'm not going to buy that first pullback again because it could easily be a fake out breakout, right? It could easily V-top, trap those buyers in, pendulum swing off the high, and then pick it up back. In fact, this is a very realistic possibility for a scenario like that, right? Professionals are not buying high unless they have to, right? Unless they get convinced otherwise. So we got to pop up, take out that high, hold the pullback, give me some proof, and then at that point, if I can hold it and we can blast going higher, okay, there's your proof. Now we can go out, mark that high, mark that big low. I try to anchor my channels out those big lows like that, find those prior swings, those will be great levels of support, and then get that deep pullback. Right? Once you get that deep pullback, then you're underneath the moving average. You have all that strength for the buyers. They're going to want to retest that high. At that point now, let those bears come in, let them dig their own grave, and buy right into those stop losses. So very convincing breakout is necessary as we go higher. Like the NASDAQ too, if we go up, and we start seeing rookies up here chasing after it, right? Trying once, trying twice. Remember, it's an overall bull market. So for me to want to short this top, I don't care what level of resistance you have. If you're selling into a bull market, you better be careful. You better be careful. Okay, no divergence is strong enough to signal a reversal. It may every once in a while, right? Even a broken clock is right twice a day. Every once in a while, some divergence will fire off and get a reversal. But it's very difficult over a long period of time unless you can use the buyers against themselves. And again, this is exactly where those two try failures, those crown reversals come in, either as a bull trap, crown reversal off the high, which I'm not a huge fan of going against overall momentum, but this is not a bad trade because we're so high up, right, off this big gap up. It would make perfect sense to retest. The inexperienced traders, the FOMO traders chase after it. Once they're committed, their stops get lit up and the market collapses off the high. Where do you think that trade would go? It'd be the pendulum swing, right? The amount above the range, the amount below the range. We'll know more tomorrow. But that would be where now think about this now. We get that bull trap off the high. We take out these lows. Now we're actually in a good spot to be buying. It's a great location, but how is momentum? Not long-term, but short-term momentum is what? It's very bearish if it rotates off the high. So now what do? You don't just simply buy. I mean, you can if you want to, right? But what I have to do is let the sellers show them what they're up to and then use them against themselves, right? Let them try a couple times down here and buy right into those stops. That's a very desirable trade right there, right? Because now you're buying low. You're going with the overall momentum bias. And, right, we're at, in this case, support level underneath that trading range. I like that one a lot, right? I like that one a lot. If we don't go higher, right, if we simply roll off this high, the name of the game is bear traps, right? The name of the game here is trap those bears in, use those stops as fuel to run back up, failure into pullback combination. The dream scenario for tomorrow is to have this thing roll all the way down to that 77. Don't hold your breath, but as of right now keep in mind, this area, that 77 to 76 half level there, it's very much based on price action. So we'll update this more and more tomorrow. But the ideal would be get that deep pullback. Remember, a deep pullback is great for risk reward, but what do you have to worry about? Exactly, a strong move down and a retest of that low. So again, let them try a couple times, look for those bear traps, run those stops and back up. Okay, this could easily be, by the way, basically a deep pullback, right? Bear trap, crown reversal, 2 tries, right, for the bears. And then as we try to run higher, then we start finding that new channel off the high, that channel off the low. and see how we kind of find those new channels, right? Drawing them back up, and we grab any of the entry patterns we're looking for right off the low of that channel. Right, so if I get it my way tomorrow, we'll jackknife going lower overnight, right? Get down around that 77-ish area down there. Hopefully a bunch of sellers don't watch this video tonight and say, "Oh, see, this time is different," right? No, it's probably not, right? Trap those bears in, right? Trap them in. Remember, use those stops as fuel. It's much easier to make money that way than trying to pick the absolute bottom. It's very difficult to pick bottoms on strong pullbacks. Grab those traps, those bear trap failures, buy into stops, and then as we get that momentum turns, now find that new channel, and we're getting in with, again, trap patterns, failure patterns, pullback patterns as we make our way back up into that trading range. Okay, keep your eyes on that. Also be aware, double bottoms, right? Same thing, going back up. So a lot of variations, right? V bottoms, right? V bottom off that low, pop up, kind of V bottom. You know what I mean? This could easily happen too. There may not be that many bears down there. We may get a lot of buyers. It may V bottom off that low, pops up, and then at that point, it's just a race to get in before we go back up and retest these highs. If it does V-bottom off that low, that's exactly where those traps come in. So as you can see, there's a lot of ways to make money if we can get that really deep pullback that we need. Now it's a matter of time, right? Now it's a matter of time. Speaking of time, I'm out of time now on the video here tonight. Thank you so much for sticking around tonight. Late upload, I apologize for that. Thank you for your patience on this. Tomorrow morning, 8 o'clock Eastern time, we'll get back after it. Next couple days are going to be very, very important as we go into a holiday weekend, right? Markets are closed on Friday. Don't forget, if you need any more help, I have all the links, the description of the video tonight, the free classes links, right? The trade room membership links, all the additional time frame links are linked up in the description here below. If you need any help getting into any of this stuff tonight, the easiest way to get help is to pick up the phone, give us a call, use live chat. We're always here to help out if you need help along the way. Guys, hope you learned a bunch here tonight. Hope you use this knowledge in the game plan to make a killing tomorrow. I will see you tomorrow morning in our trade room, 8 o'clock Eastern time with all the advanced members. In the meantime, be well, be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.